Hello, everyone. Hi. Welcome. Welcome to everyone. We'll just give us 1 minute to slowly set up and get started. Hey, Ashraf. Hi, guys. Welcome. Can you guys tell me where you guys are joining from? Where in the world you guys are joining from? You can maybe put the flags in the chat. Say hello to everyone as we slowly get started. Awesome. Thanks, Mohammed. Hi, Bosun. Awesome. Very nice. Abhijan, yes, let's slowly get warmed up into the session. Okay. Awesome. Can you guys quickly share if you can see all of us here, by the way? You can see myself, you can see Cindy, and you can see Alicia. If you can do a quick thumbs up as well on the chat. Okay, you see just me. Let me see. Okay. Awesome. I think now you should be able to see Cindy and Alicia as well. Awesome. Hi, Robert. Hi, Crystal. Hi, Mohammed. Okay, I think now we're good to get started. So thanks everyone, first of all, for joining in today. I know it's midweek and hopefully you've had a fantastic week so far. I'm going to quickly jump into it and share a little bit about why we are here today. Right. So I think venture funding and venture capital, even investments have come a long way from before, right? We're talking about sector specific, thesis specific. We're talking about sector agnostic. We're talking about building from Asia for the world, building from Africa for the world. Through all of these developments, I think what's one thing that has stayed consistent, the common denominator has been data. Right? Data is something that all of us, no matter the scale, no matter the size, no matter the thesis, no matter the role, platforms or investments have to constantly manage and deal with data. That brings us to the 3 pillars of the data, right? I'm sure you're here today to understand what kind of data exists in VC, what are the breaking points, and how you can better manage the data that you're already working with, right? So today we're going to touch upon a little bit about data capture. So it could be anything, whether you're talking about conversations, meetings, coffee chats, and you know we have a lot of coffee chats in this space. We're also talking about data enrichment, which means once you have one set of data, how can you understand, for example, if I just spoke to Alicia over coffee, where does Alicia work? Which country does Alicia work in? Which organization does she represent? Is she a founder? Is she not a founder? All of these data points become very important, whether it's for due diligence or whether it's for just archiving data. And the third important piece is data storage. Now, let me tell you the amount of times people delete data instead of archiving it, and then there is no way for us to go back to that old data, right? So let's get into it by thinking about 3 pillars, right? One is capture, one is enrichment, and of course, the third one is storage. With that, I want to share that I'm going to quickly introduce myself before I pass it on to the lovely ladies over here on the panel. So I am Devika Bare. I'm part of a venture fund called Bloom Ventures, and my role there is market networks. And anything that has market and networks together means there's a lot of people, means there's a lot of data, means there's a lot of abstraction, right? And so I think data management has been my bread and butter. I'm also a very proud Dream VC alumna, the organization that Cindy here co-leads. And I'm also part of the Dream VC team. So wearing multiple hats here, bringing in multiple data points. But with that, I'm going to pass it on to Cindy first, maybe to talk about a little bit about herself, her past, and the organization, and sort of our relationship with Seraf so far.
Yeah, hi everyone. I see that a lot of the folks in the room are Dream VC folks, but also for those that don't know me, I'm Cindy. I'm one of the co-CEOs of Dream VC, so one of the original co-founders. Dream VC is essentially a venture institute, so we train individuals, organizations, corporates on sort of the venture capital space. And we see ourselves as truly a sort of venture enabler, particularly in the lens of doing so in the African continent. So we've been doing this for now, I think this is the 5th year. So this is not the kind of new kid on the block vibes anymore, but it has been a really wild journey so far. And even from day one, when we were initially building the curriculum and everything else, we had been using Seraf resources. I think I told Alicia this when we first met. And so when she kind of serendipitously also connected to me online, I was like, oh my gosh, it's someone from Seraf. And I'll let her maybe talk a little bit about her journey as well, because I never would have imagined that the people leading Seraf now would be people that I felt like I really clicked well with, right? It always was a kind of really kind of important resource that I had kind of made a crux of our Dream VC journey since the beginning. And I'll let her share a lot more about that. In a past life, I was a startup operator. I was a founder, just not a tech founder. And I was also in consulting. I had the privilege of working across a few different very interesting VC firms. And I'll talk a little bit about my experience in those and how data played a very big role, because each of these firms had a very different way in which we organized things internally and built sort of operations and systems internally as well. But yeah, Divika, can I popcorn off to Alicia now? Alicia, please go ahead.
Yeah, thank you. Well, it's nice to see everyone, and I'm very happy to be here, especially within this context. So, as Cindy said, so Seraph has been around a long time, over a decade at this point, and I am new management, new ownership at Seraph, and so we are trying to kind of move Seraph as a legacy organization into the modern era, is what I would say. And so we're doing webinars. We do a lot of education. So we've got two pieces to the organization. One is what we call Seraph, the software platform. So we are a data services and organization platform that helps you track all of your data related to investments. And then we also have the Seraph Compass, which is the context in which I'm here. And the Seraph Compass is our educational hub where we have like all things venture investing. So you've got templates and articles and ebooks and full courses on angel investing and different pieces of the process there. And so the Seraph Compass has been built over the last 10 years and is now just a huge repository excuse me, of information and education around early stage investing. And so that's what I'm excited to be here for today. And I think there's a lot of points that we'll go through. I have a lot of direct experience with this just because of the nature of what the software that Seraph provides. And I think you guys, if anyone is generally interested in this webinar, you're in a good space to be investing, because a lot of the people that I do talk to are prospective customers or people that are in the venture space, and a lot of them have no handle on what their data is doing or what their returns are or what portfolio companies are doing well versus not doing well. Like they're just, from my standpoint, flying blind, and that's problematic. So we're happy to talk about that today, and I'll pass it back to Davika.
Sounds good. Sounds good. I think that's a fantastic round of intros. So I think that is a good warm-up point. I also want to quickly share with folks, I know you've given us 1 hour of your time, so I want to make sure that I share all of the agenda with you precisely so you know what's coming in front of you. So after this round of introductions, what we're going to do is we're going to dive straight into the kind of pain points that we talk about. We will start with a quick kind of sort of conversation lever between Alicia and Cindy in terms of what are the data problems that they faced. Why is it even important to manage data? Why can't I just put everything on an Excel and forget about it till the next time I need to access it? I think that's the age-old question I'm sure we have, but I think we will bring in different perspectives. And I think, Alicia, you being behind the scenes of a software like that, I'm sure you have interesting stories about people, interesting problem statements that people bring to you about, hey, how can I fix this? This is broken, or this has been broken since the past 20 years and I don't know how to fix it. So I think those perspectives might be interesting for us as well to learn about how we can skip and stand on the shoulders of giants. So I think happy to bring those perspectives. And I think with Cindy, even now, we deal with a lot of data internally, like 700 plus fellows is manic. Talking about 40, 50, 60 different countries is manic. So I think both perspectives are very, very relevant to us. After which we will also run through a very interesting matrix where we will talk about a few tools that might be effective for all of you. We may not be able to get into the intricacies, by the way, because this can be spoken about for 3 hours. It can be a workshop, but we will try to highlight as much as possible. After which I will share a mini case study on the kind of workflows, for example, I use on a day-to-day basis that you could maybe find value in. And then Alicia is going to give us a super visual run through of Seraf and see how we can actually use it for our use cases, if there is a use case, and what kind of problems we can solve on a day-to-day basis, right? And towards the end of it, we may or may not, depending upon how Alicia is impressed with the kind of questions that come in, she may or may not give you some kind of resources or a link to be able to just play around with Seraf in case you're interested. So I think we will get to all of that and more. But with that, let me now pass it over, since Alicia, you sort of ended on the last introduction note. I wanted to start with you. What kind of pain points have you seen? What are the problem statements that come to you on a day-to-day basis? And I'm sure you've seen patterns at this point. So talk to me a little bit about those patterns.
Yeah, so they come in a lot of different forms and fashions, kind of depending on the organization. So the organizations that we work with a fairly heavy population of angel groups, so angel networks, business angel networks. We work with venture funds, so purely like you've raised a fund to deploy capital, you've got a GP, LPs in that scenario. And we also work with a number of what I would call alternative funds. So either CVCs or university funds, funds that don't necessarily, they have one LP, like one big line item LP, and that's the organization that's the parent. And so sort of depending on the situation, they all have a little bit different pain points. The ones that I see across the board are probably the following two. So one, tracking data about the portfolio companies on a granular level. So tracking like who are the founders of the companies, what are their KPIs that we want to track, have they raised follow-on financing rounds? That's a really big one, just in terms of understanding what your investment position is. So really what people come to, they come to us and they don't know if like Airtable is the right solution. They don't know if like just build a Google sheet, right? Do I just build a Google sheet and then drop like links to updates or like things like that? That's a big one. So tracking portfolio companies tends to be really hard. The other thing, I think more than anything else, is tracking returns and your unrealized and realized IRR. That big number right there is what most people struggle with, and they struggle with it because primarily IRR is a time-based metric, or at least it should be if you're doing it properly. And so when we have people, we had maybe a good example, like last year, there's a Canadian fund that signed up with us. They were constantly, so they had an internal spreadsheet, and then we onboarded all of their data into Seraf, and they're like, hey, there's an IRR mismatch between what's in our spreadsheet and what's in Seraf. And I was like, yes, because your Seraf is up to date for the day. Right. And that maps for the exchange rate and for today's IRR. So like every day that you've deployed this investment, your IRR gets lower if you don't have a return, right? So literally day by day. And within Seraf, that will be exactly accurate. But within a spreadsheet, if you don't update it every single day, like you don't have accurate data. And so the IRR, the return information, is one that's really big that stands out to me. And a lot of people, particularly if they've been investing for the last like 5, 6, 7 years, those returns, if you have not started from the beginning, it's a really hard thing to pick up on. And then you have to go track down all the data, and they don't have their investment documents. And like inevitably, we end up doing full onboarding packages. And so we reach out to the startups to say, hey, we invested, this company invested in you 3 years ago. Can you send us the subscription docs? Like it gets really messy. And so just it's one of those that it's an afterthought. And so people don't do it from the beginning, which is fine. It's just then you end up with a massive data project years down the line when you're trying to raise another fund, or when you're trying to like give information to your LPs on what the actual accurate returns are. So that's the kind of across the board what we run into on a daily basis.
No, I think that's super, because I was expecting one thing that you mentioned about the whole it's too late now piece, which I think every organization starts as a small or a medium scale, and then we don't pay attention to the data quality. And then we come to a point where now there are so many automations. But one thing about automations is that if the data is not pretty, automations are not going to be pretty either. And then there is a panic that ensues in organizations. So I think that's a very good point as well, Alicia. Cindy, I would like to know your perspective about what have you seen, if you want to double click on some of these, and if there are any new data pain points that we've seen.
Yeah, absolutely. I'd love to piggyback off of what Alicia said in terms of just a lot of different firms not even realizing how much more structure they need to kind of bring into their processes. I think most of the firms I worked for, and some of these were like very senior, experienced VCs, right? With like 20 plus years experience, where everything was on Excel, which I will speak in the audience for the folks that are not from a finance background, frankly, almost gave me a stroke the first time I saw it, because it was like multiple rows. And the other issue is sometimes when you build multiple models across kind of multiple sheets, you might update one side and another side is not updated. So similarly to kind of how a lot of investors place a lot of pressure on founders, let's say, to keep their data rooms intact and always refresh that. I think what's ironic is a lot of investors don't take our own quote unquote internal data rooms as seriously. So I think in that regard, there's a lot that needs to be done in this. And I've even seen this within kind of Dream VC, even though we're not a traditional VC firm, we manage a lot of information, a lot of data kind of from here to there. And I think something like Seraf is really helpful because one, it's very easy to navigate. I'm someone where like user experience, I think, is quite important for me. And two, I think it functions in such a way where it's tailor-made for the solution that it's supposed to provide, right? So for example, if you have an Excel, there's lots of different things you can do with Excel, lots of different things with sheets. Whereas for solutions such as Seraf, you can kind of build and kind of, create the data from where you are at and then kind of see how it goes from there. I think another perspective that I can kind of give is just how I think in the last 10 years or so, there's definitely been a bit of a trend in the VC space being disrupted in terms of automation. So for example, one of the VCs that I worked for, they actually were building an internal tool that was essentially a AI generated kind of screening tool where it would almost kind of get rid of that kind of manual process that a lot of sort of junior staff would be doing within a VC. It was analyzing, I think, like 200 different criteria and factors. And this was like pre the whole AI craze, right? And eventually this tool became so helpful and they like built it out in such a way where it basically what I call like cannibalized the VC. So the VC firm now no longer exists, but this tool still exists. And now they've pivoted into, I think, being a AI powered accelerator program. So almost like a YC for startups, but for everyone else, where you can gain the same amount of kind of automatic feedback and everything on that end as well. So I think it's quite interesting to kind of see a lot of these different trends, how data has been used, and also kind of understand how as an industry, as we move forward, how we can get on the edge of this innovation, given that traditionally VCs have not been the most susceptible to disruption, even though we are operating in this kind of disruptive industry. So yeah, I think this is one of the big things we're going to be exploring in today's webinar, and of how exactly these different tools come to play, and also how data plays a very big role in that.
Awesome. Thank you for those interesting perspectives. I think some stuff I've heard previously. Some things are very, very new to me. So I think it's very insightful. Also, thanks, Mark, for the comment. Also, some hygiene factors, probably a little 20 minutes too late, but feel free to use the chat to share what's on your mind, share the kinds of tools that you're using. Because I know everybody right now, if you are sort of solving real problems, is you are at least trying to test out. You're on a free trial for at least one platform, if I'm not wrong, right? Maybe 90% of them don't go through, but one platform everybody has tried at this point. So please do share about any problems and anything else. Also, for all the questions as well, thanks, Helen, for the question, by the way. We will go through it, but feel free to also put the Q&As in the Q&A chat. This enables us to sort of mark the questions that have been taken and mark the questions out if we've already answered them so that they don't get drowned in the chat. With all of that, let's now move a little bit. So there's the problem statement. We've heard about data completion. We've heard about, or the lack of completion. We've heard about sort of updating metrics too late. We've heard about using, valuing data rather too late in the journey of an organization. Now let us take a little bit of a deep dive into each step of an organization and where the pain points exist. This is going to be, mind you, a good 4-minute run of pain points. So everybody must bear with me. Try to listen in, try to resonate as much as possible. Okay, so here we go. Also would need everyone's help to understand if you can see what I'm showing on the screen. All okay? A-okay? Okay, awesome. Great. Awesome. So let's look at this fancy schmancy matrix, right? So what this matrix is trying to tell us is, number one, visualization matters more than the kind of tools you're using, right? Which means what I'm trying to say is, I think this is an age-old saying that if the input is, in quotes, right? If the input is trash or bad quality, the output is going to be trash or bad quality. So all of this starts with data discipline. I think we will touch a little bit on how to position a software for success a little later into the session. But let's talk about the different pain points across the stage, right? So the first part is sourcing. Depending on what kind of an organization you have, high level, you'll have two directional prongs, right? One is inbounds and one is outbounds. If you are like a famous organization, you will have about hundreds and hundreds of inbounds coming in. And if you are somebody who does not open for inbounds, but only keeps it to warm intros and outbounds, then of course that's a little more manageable. But with inbounds, it becomes very important to manage the data effectively, to capture the data effectively, to have tagging on the data so that in the future, if I want to know, hey, there is this SaaS AI product that came to me a year ago, and I really like the founders, but I didn't have the conviction yet. I want to see what the founders are doing today. I want to be able to go back, filter, and go back to this data that becomes relevant for me, right? I want to be able to discover the portfolios that exist because a lot changes in a day. So that's a piece of sourcing. There are some examples of softwares listed, by the way, on the right-hand side. I'm not going to dive deep into that yet. Right? The second pain point is, of course, diligence. Now, there's different forms of diligence that you can have in an organization. You, of course, internal diligence, you do showcases within the organization, but you also have sometimes external people or CXOs coming in to help you with the diligence. Or sometimes it could be a relevant conversation with, let's say, a CTO of a company like Zuora, right? The CTO comes down to your country, you meet him, and you tell him, hey, this is the kind of company we're evaluating. It's very interesting. And he gives you some important feedback points. All of this data, where is it going, right? Every conversation has a good source of value. How are you capturing this data? How are you feeding it down? Unless you have 3 interns under you, which in a lot of VCs is very, very rare. How are you managing this data? How are you not forgetting about it, right? And how are you making sure you're coming back to this data to understand that something important happened? And then you also have different layers. You've got legal, you've got financial, you've got tech due diligence. How are you bringing it all together to sort of create one story, right? Then, of course, you've got investment ops. I think this is also something that we've covered. I think Alicia also touched on it a little bit. But I think this layer is, I think, fairly tech-enabled at this point. You've got very good softwares. You've got DocuSign, you've got Dropbox. All of these are considerably used to a great degree right now. So I'm going to just not focus on that so much. Moving to the next step of portfolio management. This is where we talk about when was the founder interaction? What was the kind of value that you got from the founder interaction? What is your cadence of reporting? What is the kind of data you're reporting? Do you have segments of data that you share to certain kinds of LPs versus the others? Certain kinds of data points maybe for family offices, certain kinds of data maybe for sovereign funds, depending upon what is the LP profile. Maybe you want to curate something for each one, right? You might also want to curate it for the industry that they are a part of. If you go deeper and deeper, you want to talk about what kind of founder updates there are. And I don't know about each firm, but I know VCs operate across different models for communication. I know WhatsApp is, as much as we don't like to say it, WhatsApp is heavily used to communicate about anything in the VC space just because it's convenient, right? You're just quickly asking a founder about, hey, we changed our business model just last week from a B2B to a B2C. And then you hop on a call to discuss that, of course. But a lot of these conversations happen on a daily basis, which brings me to the fund operations of value creation. Now, this part is basically my bread and butter. So let me vent about what I suffer on a daily basis with, right? So let's say I'm trying to help. So basically what I'm doing is I'm bringing in revenue for our founders, which means I'm making introductions to them, to different kinds of enterprises, different kinds of companies. Yes, Mark, fully agree, WhatsApp all day, every day. And so what happens here is, I don't know what's happening with each portfolio company. Mind you, we have, let's say, a portfolio of 150 companies as we speak right now. How do I stay updated with all of the information, right? When was the last funding round? Who are the kind of sort of people that came in? Are there any management changes? Have we written it off even, right? All of this information becomes very, very relevant there has to be an audit trail. There has to be sort of, and one thing is, and I think Alicia and Cindy, we should definitely talk about it, is data fragmentation. I think, Cindy, we were talking about this just 2 weeks ago, where it's like org level, we want to use one tool, but we personally also prefer to use different tools. So how can we even manage that problem? How can we find a middle ground, right? So I think that becomes relevant. And then, of course, we've got dashboards. So dashboards are where all of your reports might come out of. What is the important KPIs that you're tracking? Are you tracking even the right kind of information that you're supposed to track? Is your system intelligent to be able to give you nudges about your reporting? When was the last report sent? Can it automate it for you? And then the last layer is sort of across, right? Actually, I should have put the layer on the left side with an arrow, but this automation layer is across all of the pain points. Are you able to take away some part of the manual nature of this particular job that you're doing? Are you able to ask a system to do it? Caveat being, not all automations are good automations. Not everyone needs automations, but can you make it trigger-based and relevant to you or your organization, right? So that was my speech about all of the pain points. And I know every person on this call will sit at least in one place throughout. Even if actually you're not a part of an investment firm, you will somehow sit somewhere here. So with that, I'm going to now bring in Alicia. Alicia, like a knight in a shining armor, I do see a lot of examples of platforms here. So I'm sure everybody knows Affinity, Airtable, DagHash, Notion, King Notion. But Alicia, can you share a little bit about realistically, right? If you were to tell me, I'm having all of these statements, and if you were consulting me, how would you tell me to utilize the software to be able to at least take away 50 to 60% of the burden that I feel?
Yeah, that's a great question, and I'll try to give you my most unbiased. So I'm a biased party, obviously, but I'll give you my most unbiased recommendations here. So the first thing, what I would start with from an organization level is like understanding what your biggest pain points are, because you're not going to be able to solve all of them with one software. And the reason for that is that people, uh, VCs, and you'll every once in a while see a startup pop up with this thesis like, we're going to fix the back end of private investing. We're going to fix the back end of private markets. And the problem with that, especially from a data standpoint, is that so for this space specifically, the market is not big enough. So we're all like, as a VC, when you evaluate a startup, you say, okay, what is your TAM, SAM, right? How big is your total addressable market? From Seraf's standpoint, our customer is VCs, angel groups. Our total market size is like 100 million, maybe, like on a good day. And so when you look at it, like there's maybe 1,000 active VCs in the United States, call it another 1,000 to 2,000 worldwide. Even if all of them pay $10,000 a year, $15,000 a year, your market still doesn't crack $1 billion. And therefore you don't have software as like you have a couple of firms who have raised funding. And that is problematic for a number of reasons. And so that's actually one of the questions I would ask from an organization standpoint. Is this company, have they raised funding? Because if they've raised funding, they've taken venture capital and they're not going to be able to scale to the point where the investors, it doesn't fit the venture model. In my opinion, again, and this is just me, but it doesn't fit the venture model to raise funding for a company that's serving VCs. And that is just the state of like the size of the market. Like in most, a lot of them have like Seraf, right? So we touch deal flow, we touch portfolio management and reporting, but we don't touch fund ops, and we don't like, we've got some automation stuff, but we don't heavily touch automation. Whereas you have like, if you're setting up SPVs, you've got Sidecar, and Sidecar is very heavily on the fund ops, but they don't really do anything else from a reporting standpoint. And so a lot of these, you're still having to piece together to a certain extent. And then what becomes important is, does this particular software have an API that I can connect to, either through Zapier or through something else, to then feed things back and forth? And so that's the direction that Seraf has gone personally, just because from an organization standpoint, there's so many different there's so many different pieces to the operational puzzle that we have decided to focus on deal flow and portfolio management and open up our API so you can feed and do other things. And so just like from each of these pain points, I would say, the matrix that you probably want to rate on for your organization is like, how important is the pain point? And then within that pain point, is this tool really high powered or is it lower powered? So on that scale. And then what is the cost of that depending, right? So Serap's going to be somewhere in the middle. It's lower cost, but somewhere in the middle in terms of, you know, being powered up as a software. And that's kind of my terminology. And I hope you guys know what I mean by that in terms of like features and bells and whistles and everything that kind of lives on the top of it. And then from there, you might want to look at the location of that particular software and the company, because that's important to some people. Serif is US based, but there's like TagHash is based in India. Zapflow, I think, is based in Finland or Norway, one of the fingers up in Europe. And so if location is important to you, that's something you want to look at. Size of the company and whether or not they're sustainable as a company is also something to look at, especially if they've raised venture funding again. And then from each of these, like some of my favorite tools, like if I had to put Serif completely out of it, I know Affinity is probably your highest powered option for deal flow and relationship tracking, because Affinity spans beyond just like a CRM. It spans into what's really important for VCs, and that's relationships. And so it tracks like who knows who and who's in this location and how can I reach out to them and create these back-end relationships. That is really important for your founders. So Affinity is really good from that standpoint. The most VCs and angel groups that I talk to, if they're not using a specific tool, they're using Airtable. Airtable is just like the widely accepted free option. You can create a custom form, feed that in, and track your deal flow through there. There's nothing wrong with it. The only thing about Airtable is that you don't necessarily have email integration in most cases, and you don't have a ton of automation or like customization. It's not customized to venture. So there's that part. But Airtable, if you're looking for a nice, solid, free option, Airtable is a good way to go. I have heard good things about TagHash, and I actually talked to their founder a few months ago, but I don't have a ton to say about them just because I don't know the ins and outs of their software. But founder was nice, is what I could say about that. On diligence, the biggest thing here is going to be customization, in my opinion. Again, like, can you add your ratings? Can you add your notes? Can you create custom stages, like, and add all of your diligence docs into one place? Sometimes people are better off with like a traditional CRM, like literally Pipedrive or HubSpot or Salesforce. I've seen groups use those just because they can link in and you've got everything that you would need for a full sales pipeline built in to that software. So that could be a good option for people. Investment ops, a lot of this. So the reason that Serif doesn't touch this is because most of this comes from your fund administrators. And so fund administrators, a lot of times they're the one doing the wire, they're the one doing like the KYC checks, they're the one doing like all of the stuff around actually deploying capital. So we don't really touch that. You've got plenty of options there, but you also, one that I forgot to tell you, Devika, is Veraven. And Veraven just got acquired recently, but they're the actual payment rails is what they built. So you can actually deploy capital through the platform, track your capital calls, whereas like Serif is a repository for transactions. So after it's happened, you can log it in there and you can see all the returns related to that. They've built something so you can actually deploy the capital, but you can't do the reporting and the tracking, right? So again, people chose their lane and then we kind of stay there. But that's an interesting one from a fund ops perspective. Yeah. Portfolio management, you've got a number of options. You see them here. I would say look into these ones. Visible VCs is doing some interesting stuff with AI reporting, which I think is cool. And just started to speed up because I don't want to take too much time. But then the next ones here, like impact and benchmarks. Rundate, I would say, stands out to me just because I know their founder too, but you can customize all of your dashboards and reports and stuff in a way that's really cool. And it's all custom built to what you're doing as an organization rather than being more templated, which is kind of where Serif lives. So Rundate is really cool from that standpoint. Again, their founder's really nice. And then fund ops, the only thing I would say here is that a lot of people don't take up with a portfolio management tool from the very beginning because they think that their fund administrator is going to cover that. Most likely they don't. Carta did acquire one of our competitors recently, and so you have a better option if you're using Carta now. I don't know what the upsell is on that, but because when they were standalone, it was $5,000 a year. Now that they're with Carta, I'm not sure what that means, but most people assume that their fund administrator is going to do this for them, and they're not. The fund admins, they deploy capital, and they'll do your like capital accounts, but anything related to portfolio companies or returns, like the fund admins are really not covering that for you. So that's one thing to note on all of that part, and that's where I'll stop because I've been droning. But this is where I live. So
Awesome. No, I think that's super superb. But I think something I've realized, and I think I was sharing this with Cindy just before the call started, was I said, I think we may or may not, depending on how everyone feels about this, we might have to do a round two, because I think there is a lot of information and you can dive in. Yes, you can dive in really, really deep. And I think I'm telling you for sure, at least in this tooling space, a lot of people are very much curious about this. Everybody wants to see, try and learn what they can do better, right? So yeah, for sure. I think so far so good. I would also like to quickly highlight, again, this is not a sponsored thing, guys. It's just I've been really enjoying using Bardeen. So the automation layer, I try to automate as much as possible with Bardeen on a day-to-day basis. So anything related to outreach where it's much more scaled. And I'll show you how I use it a little shortly. But Cindy, I want to bring you in on this point. So I know Alicia brought in a couple of very interesting filters on how you pick a tool. And honestly, I have done at least 7, to be honest, 6 to 7 free trials in the last 2 months for different tools. And at the end of it, I cancel the subscription because I don't know how to vet the tool because there's so much of information, right? And I know internally we make a lot of executive decisions on the kind of tools we want to use, whether it's Notion, whether it's Coda, whether it's even Zoom right now. What are your kind of filters when you think about, apart from budget, of course, everything at the end of the day comes down to the money you can put in. But what are your filters when you look at bringing in a platform?
Yeah, so I think a few of them Alicia also mentioned. I think one is integration, like how easily can I integrate this tool into some of my existing workflows? If it's a case where I have to entirely migrate a lot of information, I'm someone where I'm very impatient. I want everything done like perfectionist right away. So if it's something where I need to spend a lot of time rebuilding all the workflows from scratch, that can be a bit annoying in my opinion. The second one is at least from a team perspective, and this may be different for, different people, because obviously if you're in a VC firm, you're an intern, the GP tells you you're using this tool, you're going to use this tool. I think in Dream VC, we're almost like a startup, right? In the sense that we have quite a flat hierarchy and everyone is relatively self-autonomous. So sometimes we end up trialing certain tools for a period of time to see what sticks. Like, oh, is this something where we actually consistently use it? Because I think one of my personal sort of bad habits is that sometimes when I use a new tool, I use it consistently for 1 or 2 weeks. And then unless there's like a very clear increase in my productivity and my effectiveness and managing the data, I end up not updating it as much as I should, which I think is something that is, an issue that all of us deal with. So I think those are kind of the two main considerations. If I'm looking at it from a sort of venture perspective, I think a lot of this would also boil down to kind of the size of the team, how you guys already manage your existing workflows. I think from my personal experience, it's much easier to migrate from, okay, we're doing everything on Excel, super traditional way, into one of these tools, because then either way, it's actually already accelerating your process. The harder transition comes if you're already using perhaps one or more of these tools in the first place, and then you have to kind of figure out, okay, which one works for what. And I think the third dimension to that is kind of what Alicia mentioned, is that sometimes what happens is that you have too many fingers in too many pots. You end up getting really excited about automation, and then you have like a different tool for every single section, which is again why I was really excited about Seraf, because they do like a lot of these things in kind of one platform. And I guess just as a quick plug for the Dream VC guys that are in the audience, so Alicia is already scheduled to come in for a special session for Seraf later in the program. So she will like physically walk through an activity where you guys will be able to go through and plug in numbers yourself. For those of you that are not in the Dream VC sessions, don't worry, we will try to schedule another follow-up as well, where we can dive a little bit deeper into tools, just because I think it's really important to be super up to date on all of this now that we're in the advent of a lot of tech innovation.
Thanks so much for that, Cindy. Yeah, I think very important points. And I think I like the fact that you brought in the idea of how it's easier to make drastic changes when it comes to tooling versus micro changes. And I think the way I think about it is, at this point, it's a battle of features. Every software on a given basis, every day they'll come up with one new feature, another new feature, and then you're kind of like, oh, damn, I should have just bought this one, or I should have gone for this one, right? But I think we've got a long way to go to find, like, eventually the market will distill softwares into some that have become industry favorites. So I think I think we're perfect on time so far. I want to quickly share before I bring in Alicia again to see the platform, because I'm very curious about how it looks like. I want to talk a little bit about a couple of tips. Usually these tactical tips are very, very helpful, right? So one thing that I use, and I know Airtable is not as dynamic. It is quite static in nature. I think dynamicism and flexibility is kind of a spectrum. But Airtable has been coming through the game, guys. It's been showing up. And now it has new AI features that were recently launched. And this is one feature that I have been using for a lot of my calls, by the way, is if you can see, I keep all my data here. So my people data, the introductions, I make at least 70 introductions for each portfolio company across a given month. Interactions, CXO database, my goals, my events, everything is tracked here. I also have a dashboard. But one thing I use is, for example, I have a particular corporate. Okay, let's take a Hitachi. If I put Hitachi here, I have enabled my Airtable to run an automated web crawling every day. So Airtable goes to the web and says, what is the new update around Hitachi? So I put a prompt. You can put whatever prompt you want. You can talk about leadership changes. You can talk about new people joining the organization. So you know what use case you might want. I need to know about what's happening with the company. So before I jump into every call, I quickly go through my Airtable to see what's the news. For example, in the last call, a real life example is Hitachi launched a new corporate venture fund. So as a talking point, I brought that in, and then we learned about their corporate venture fund. We learned, for example, they are interested in, I don't know, quantum computing, for example. So these become very helpful tips that are not super big, but I think they can make a huge efficiency difference in your day-to-day workflows. Affinity, I think Alicia has already covered. I love Affinity as well. With an organization like a fund where everybody is kind of busy in their own business, I'm part of the platform team, so I don't really talk to investments as much when they're in the in-season of investments. But the way I can sort of figure out what's happening is I go to the Affinity portal, figure out, hey, I want to talk to Alexander today. And then I look at which person has the highest relationship strength, and I ask them for an introduction, right? So this saves me a lot of time on cold outreach, right? Of course, I'm not going to go through a couple of these other things, but I'd like to end my piece, and so we can move into sort of the Seraf run through is one thing I've learned having these workflows, and by the way, this workflow on the left is something that I use pretty much once a week. I can talk a little bit more about that, but for now, I would say if you are thinking about building workflows within your organization, don't think about tools, because trust me, I tried it. I went cuckoo, manic, went back to stage one. Don't start with tools. Start with workflows. Start with what do you want to fix? What's your input and how your output should look? And then feel free to fill in the gaps with filters, budgets, like Alicia mentioned, location, like Cindy mentioned, integration, right? But think about workflows. And there is no one right tool. There is a right tool that fits you. So I think that's very, very important. And remember, if at some point you do want to automate, you have to make sure that the discipline is there, the data quality is there, and then you have explored a little bit of the workflow piece. Because if you've not done any of this, and if your data is half there, half not there, fragmented, incomplete, even if you do an automation, it looks very cool, by the way, when LinkedIn automatically pops up, it types those messages, but the output is not going to be that strong, right? So I'd like to leave you with this. And now I'm going to pass it on for the exciting visuals that are coming. So Alicia, I'm going to pass it over to you to run us through Seraf.
Thank you. And I would double tap on that. There is not, if you go down the path of like, I'm going to figure out what all the tools are that are available to me, and then I'm going to vet all those tools, and then I'm going to decide. You will, that's the worst. Don't go that direction. Do it, because then figure out your workflow first and then piece in, because also a lot of what you'll see with the tools in the VC space is that they're not, there's a core of what you need to be able to do for that particular workflow stage. And then bells and whistles and features on top of that are great. And you can pick which ones are your favorite, but the core of what you're doing is going to be the same. And so Sarah, I'll give you an example, but like the core of what you need for a portfolio management tool. You need to track your portfolio companies. Ideally, you need to track your fund metrics, and then you need to track your returns. Like those are kind of very standard. This is what we need for metrics to create what is our IRR, what is our MYC, right? And then from there, whether you have the extra like customization or you can track KPIs or whatever it is, everything on the top of that is what you need to decide from a workflow standpoint. So I would just double tap on that, because when people reach my my Zoom meeting, and they're like, we're evaluating 7 different tools or 8 different tools. I'm like, you're not going to get there. You're going to end up with the first tool that you looked at because you exhausted yourself. So anyway, all that to say, I'm going to share my screen and give you guys a super quick walkthrough of Seraf, just partly because it's great for me, for you guys to see Seraf and have a reference point, but also being able to understand like what the ins and outs of the tool should look like. And I won't say Seraf is not the highest powered tool in the market. So if you look at let's see, Visible or even Bestberry has a decent option for like additional features, but like just to give you a reference point for what is out there, this will be a good walkthrough for you. So this will be your main dashboard. Most softwares are going to have a main dashboard that rolls up all of the metrics about your fund. Whether or not you have multiple funds is a consideration. So Seraf will give you your full fund view here if you've got multiple funds, or you can just look in any single fund that you've logged here. So the dashboard will have all of your fund related metrics. So your portfolio value, your basis, fees, gain on the portfolio, all your return information auto calculated on the right side. So your unrealized, realized IRR, your exit multiple, total cash in, those kind of return metrics. Going down, you've got some like recent activity. You have a little breakdown of what's in the portfolio. You have your net asset value components here. And then you have your traditional fund returns. So this is like the really important part that you should know about your fund. What is your DPI? What is your TVPI? Those are like things that every venture fund should be tracking. And these are also the metrics that are somewhat difficult to track if you're not using a software. So if you're building, you could build out a massive spreadsheet. And that is something that some people have done. They prefer to stay in Excel. And so you can build this into it. It's a lot of work and a lot to put together. And then it's a lot to keep updated. So, so you've got your returns here, and then you have portfolio KPIs. This will differ depending on the software. So ours are fully customizable. You can track them at the fund level. You can track them at the company, like the individual company level. Whatever KPIs are important to you, you can track those across the portfolio. I would say that this, particularly for like impact related funds or anyone in if you have any sort of specialty for your fund, it might be worth looking for a software that does allow you to track KPIs, just because if you have specific criteria that you need to hit for your portfolio, then you want to be able to actually track those things. Down here in the bottom, you have a couple of reminder tiles. So overdue reports is for companies that haven't sent you an investment report or you haven't uploaded an investment report in the last 90 days. Active reminders is for like upcoming dates or anything important related to the portfolio. So then you have just things here to remind you about the portfolio operations in the bottom. This also functions as an LP portal. So that's another thing to consider as you guys look for tools, is how much transparency you want to give related to your LPs and your investors or board members or whoever that happens to be. Because with Seraf, they have pretty close to full access. You can set document permissions, but if an LP wants to log in, they're going to see what you've invested in. They're going to see any documents that you've allowed them to see related to the portfolio companies. They're going to see investment reports for the portfolio companies. And some people genuinely don't want that. And that, not for any nefarious reason, but like they just don't necessarily want a million questions coming from that like one super active LP that looks into every single investment that you've made. Like some people don't want that, and that's totally fine. It's just something to consider. Whether you need to have that function or want to have it now or later, just a part of the process there is like giving LPs access to something that they can come in and see what's going on. So anyway, this also functions that way. And then this is mostly driven by current investments, everything that's active, and exits and returns. So exits and returns is all of the liquidity events. So you can track things that have been rolled down. You can track full exits. You can track partial exits. One thing to consider when you're looking for software is the partial exits. A lot of people think in terms of like, we've made this investment, either this investment is going to shut down or it's going to net us 10x, right? But I would say in like 50-60% of cases, it's somewhere in between. So they give you some cash and then you also roll over stock into the company that acquired them, or they've gone public, or like being able to track those nuances is something that you will not know that you need until you need it. And that happens like 7 to 10 years down the line by the way that venture funds work. So just something to consider whether or not you can track those like in between situations in the software that you choose. Back to current investments, this is everything that's active for companies and also funds. So Seraf does allow for fund-to-fund investments if you happen to have a fund that you're investing into other venture funds. Most funds don't do that, but some of them do from fund-to-fund activity standpoint. And then it's a relational database. So here we're in the active investments. If we select into the investment, we have all the data about that investment. And then all the background stuff here. I'll just kind of skip through this, but then you have notes, you have KPIs that you can track. So again, these are like fully customizable depending what you want to track, but you'll have the graphs over time so you can see how the company is progressing, target to actual. You've got your investment tab, and this consolidates the investment into the company. And then the other important thing here is that you have evaluation history, and this allows you to both track follow-on rounds for the company and mark up and down your position. So if you do mark to markets annually, or if they have like 409A valuation or some sort of accounting report that they do for a formula valuation, you can log those. Some softwares will not allow you to do that. And it's really up to you whether that's important to you. Most softwares will allow follow-on rounds. Some of them don't allow just like it's not arbitrary, but like if you're doing a mark to market and we'd say this is worth $5 a share and it was worth $4 a share last year, like that may be arbitrary. So some of those softwares won't allow you to do that. Ours does. And then just with another quick 2 minutes, you've got portfolio analysis. And so this has a bunch of different breakdowns of like how the portfolio has paced over time, your investments, your outcomes by length of investment, like a bunch of different breakdowns here. And then you also have a custom analysis section. And this is for pulling out any particular criteria that you want. So the example that I use is like, if I'm looking for companies with female founders, I go to leadership, I choose female, I search that. And then that tells me down here that out of our total portfolio, 25% of the dollars we've invested match that criteria. And so it's just a way to pull up really quick metrics about the portfolio, and you kind of slice and dice in a lot of different ways. And then finally, you have things about the fund, and there's a ton more to this, but very quickly, this is where all of your fund information is tracked. So your capital commitments, capital calls, portfolio investments, net asset value, cash to fund. So things that a lot of people use this section very particularly for auditing their fund admin. So making sure that everything is correct, all the inflows and outflows are correct, all the metrics are correct that they're being provided. And then most of that lives down here in like fund management. So all your LPs, their percentage ownership and all of that kind of thing. So then you've got documents and reports and KPIs and dates and stuff like that. But this is the core of the software, just to give you a good reference point for what exists both for Seraf, but also in general, the kind of things that you should be looking for. So I hope that was helpful.
That was awesome. That was super, super cool, Alicia. But yeah, we do have a couple of questions. But I'm trying to make the questions as generic as possible, and at the same time still trying to answer them. So I guess I know you ran us through the filters, right? You can add the 13 filters that you had, women, men, gender, whichever. Can you add filters sort of across the board? Is there any limitation? Can you talk us a little bit through the filtering process?
Yeah, so the filters, you have the ability for custom tags as well as, so you can custom tag things as far on the company level, and you can filter by a bunch of the different criteria that we have. So like year of investment or size of investment or stage or like industry, product type, all of those different things. A lot of people just use the tags because that's just easiest for them. But you do have a ton of options in terms of filtering. The KPIs you cannot really filter out that well. Like I would say the KPIs are more, they're useful across the portfolio because it's going to roll up everything that you're tracking per portfolio company, or average on some cases. So depending what the actual KPI is. But I would say the KPIs are more useful on an individual company by company basis rather than, and the KPIs are like mostly quantitative. So they're mostly like, their runway or their revenue generation or subscriptions or something. Like most of those you can track qualitative stuff. It just doesn't really do much. Most of it's for graph and like numbers purposes, if that helps.
Yes, of course. And then can you sort of dashboard these filters? So let's say if you want to create sort of a forever visual dashboard of these 1 or 2 filters that you want always on, I guess, is there a way you can do that?
There is not right now, but that's a good consideration because that's not hard for us to build. It's just not one that I've considered.
Awesome.
But no, that's a great idea as far as like save searches, basically.
Yes.
Save filters. Yeah, no, that's a great idea. No, we don't have that right now.
Okay, awesome. So I think that was Samuel's question. So I think, Samuel, kudos to you. And that might be a feature upcoming, hopefully, Alicia, for us. But I think the next, maybe we can just take one more general question. In the meantime that Alicia answers this question, I also want to run a quick poll because we had 2 polls for the day, but I've realized there's so much information to give. So I will run one poll in the meantime so that everyone's equally engaged. But Alicia, just one quick understanding from your experience, right? I think people are also very interested to learn about what are the blind spots. For example, when you were running us through the dashboard, you shared like, these are metrics that are important, but a lot of people don't think that they're important till they're 7 years into the investment stages. So what are one or two like high level KPIs or metrics that you think are blind spots?
I would say the biggest one is the ability to track. Okay, so this all actually kind of stems from information rights when you make the investment. And I say that because a lot of times people run into trouble because they quite literally cannot track, they don't have the information to track follow-on information about the companies. So understanding what the metrics were for the follow-on round is one of the biggest things that you could do as an investor. And if you don't have information rights, like literal legal information rights to the company and to investment reports, use like a lot of the angels, they end up completely blind to what's happening in the portfolio company. At least that's how it works here in the States. I can't necessarily in Europe to a certain extent, but a lot of times they just end up entirely outside of the loop because they don't have those information rights written into their legal agreements. So the problems that I see when you have a 5 to 10-year-old portfolio is that it's not necessarily that you didn't think about tracking or you don't know it's a problem. It's that it's a problem and you don't have access to information. So that's a really important thing to think about early on. And it's a really tough one because the relationship between VCs and founders gets it's a tough one to navigate because the founders look at it and like, why do you need legal rights to my information? And from investors' perspective, like founders feel like you're accusing them already of doing something that they're not supposed to be doing. Like I'm just going to shut you out as a founder, and they don't like that, and so it feels not great. I think, but it's one of those that is almost for me. If I'm investing, like it's necessary. It's a necessary part of the process, and I would build it in from early when you start the conversation, so they know that it's coming, rather than saying like, "Here, we're willing to invest, but also we need legal rights to information because we've been doing this long enough that people just things happen, and then you don't get info, and then you cannot track your metrics accurately." So that's a big one that I would say. And if there's one thing that I would think about, it would be that.
Got it. Yeah, no, I wouldn't want to be in that position where I'm 3-4 years down and I'm asking for founders for information that they were initially not aware that I needed. I think it might be a super, super awkward position to be in. So no, super, super thankful for that answer. So I see majority of folks over here are sort of using spreadsheets to track data, which is again, no shame. I still do it. I use a more advanced version now that it's called Airtable, but it's the same thing. And then some folks do use generic CRM like Notion and Airtable and Salesforce. And there's a small amount of people, about 15%, who use purpose-built tools like Seraf, Carta, whatever. And there's about 19% of people who say nothing formal, just emails, chats, and memory. So I think that's a good, an anticipated distribution. But thanks everyone for participating in the poll. I guess one last questions, I think, before we close, to end on a slightly lighter note. What is that one tool that you believe really made a difference for you? It can be any tool, but it really made a difference. And maybe Cindy, I can put you on the spot first. What is that one tool?
In like the venture space or just like in general?
In general, I guess different use cases.
I mean, Coda.
Yes.
I think when I first discovered Coda, I was one of the very early users of Coda. I just like that it was like a sleeker Notion while also having the feel and UI of like a Google Doc, and you can integrate it with a lot of different things. I don't actually utilize Coda to the full extent that it could be utilized. I know some of my friends are like Coda gurus. So yeah, for me, it's probably Coda.
Awesome. What about you, Alicia?
I would say,
Apart from Seraf.
honestly, apart from Serif, yeah. So one of my favorite things right now is lovable.dev, which is a no-code tool. It's like text to development. It's super buggy. And this latest project that I'm working on, I've spent 400 credits almost. And literally 25% of those are redundant. I made a LinkedIn post about this because I was annoyed. It's redundant in that you're like, hey, this didn't work. Can you fix the error? And then it's like, oh, I fixed it. And then you're like, it doesn't work again. Fix the error. So like, but as far as tools go that you can build cool stuff in, lovable.dev is fun.
Okay, that's awesome. So I think super, super awesome conversation. I think we've had fantastic retention, by the way, and I'm sure this was honestly, unbiased, if I was an audience, I would be listening in, because there was a lot of important information, a lot of tactical information rather, which is actually the most useful one if you, in the grand scheme of things. But really appreciate everyone's time. Please continue the conversation. Feel free to send a LinkedIn request, share what else you might be interested to learn about. We will be sharing a post-event feedback form. Do share what queries you still have. Maybe we can consider doing like a problem solving session or like a webinar workshop session where we tackle mini case studies of problems and how we could potentially solve them. I think that's interesting as well. But thank you so much for your time, and hope you have a great day or evening wherever you are. Take care, guys. Bye.
Thank you.